Welcome to episode 25 of our free training on Forex. This is Leading Forex YouTube channel. My name is Kofi, your admin for this channel. In today's video, we're going to look at something very important under technical analysis or in Forex trading. But before we do that, I have a message for you. And the message has to do with my contact details. I've had a few people who have sent me screenshots with regards to people they nearly paid money to, or people that nearly impersonated me. Not that they impersonated me as Leading Forex and also Kofi Dollar. And so they asked that those people should pay some sort of money to them for mentorship and stuff, whilst those people are not me. So I would like to display my contact details so that if anyone will want to verify or to get to know whether indeed you are having a message or a conversation with me, then this is what you should use to verify that. Is that okay? My Telegram handle, if you want to chat me on Telegram, is at Kofi Dollar, on Telegram. If you want to send me an email, it is leadingforexgh@gmail.com. leadingforexgh@gmail.com. And my phone number is here. You can call me directly, or this same phone number is what I use on WhatsApp. So +233 246 136609. Please, these are my details. And these are the ways you can actually verify whether indeed you are in contact with me or someone else. I wouldn't like to share screenshots to make my message very long. But to make things very simple, I am in Ghana, in Africa. Ghana, that is where I am. And these are my contact details. Please, there are a lot of scammers on the internet. Do not fall a prey to someone, or do not allow anyone to just take your money away for no reason. Be vigilant. Thank you. Now, today we have a very important lesson, which I am very sure you will enjoy. But again, let me answer this question that came on the channel. There was a question that came on my channel. Someone wrote a question on the channel, and I think this message is very important and I need to address it. The message came from Mr. KTV. So Mr. KTV was asking on the chapter 24 or episode 24 of our tutorials. On that video, he wrote, "Great video once again, Mr. Kofi, but please, when are we going to start trading, if I may ask?" So Mr. K wanted to know when we can actually start using the tutorials we've had so far to trade. I'm sure that is what he's trying to mean. If you are new to this channel, we have a whole playlist, Forex Training for Beginners, on this channel. And it starts from episode 1 or part 1 up to the current episode here, which is part 25. So in that playlist, you'll find tutorials. It's all about Forex trading. tutorials. And Mr. K wants to know, when can we start using what we've learned so far in trading? Mr. K, all I want to say is that you do not have any time to waste. I have given a few samples of how to get a strategy. And I talked about support and resistance. I talked about candlesticks formation or candlesticks patterns. I also talked about indicators. So you can go through these videos I have just mentioned: support and resistance, indicators, candlestick patterns, and then try to combine these strategies. They are just sample of strategies I decided to give out there on the channel. Try combining one or two of these strategies and then try it on your demo account and see what things will be like. Or you can look at those samples and out of that be able to develop a strategy on your own and practice that. And then I'll be glad for you to give me feedback, results, telling me whether you are making it or not. So that if you are not getting it, I'll be able to assist you. Or in case you are getting it, but still not getting it well, then I'll know how to actually help you, or tips that you might need. I'll know exactly what to do. So I think from episode 1 up to episode 24, you should be able to find a strategy out there. If for nothing at all, we have support and resistance there. We have candlesticks pattern there. We also talk about indicators. So you can start trying these ones and see if they are not giving you good results. We can modify them, or there are better ones coming on this channel. I promise you, there are better strategies. Everything I know about Forex, I'm going to show you everything on this channel. So there are better ones coming on this channel and you can't miss it. So just subscribe. In case you haven't subscribed to this channel, just subscribe to this channel and hit the notification bell so that anytime a new video is posted, you'll be the first to grab it. If you also have a question, you can leave that question on any of my videos on this channel. Just leave your question or whatever you think on any of these videos. And every day I go through the messages that are written on the videos, and the ones that need quick answers or response, I respond to them. And the ones that I may choose, like the way I have taken the Mr. K's message down here, I'll do that so that together we can understand the whole Forex thing and get our way through it. Is that okay? Now, if you haven't watched the whole playlist, go to the description of this video. You'll find the whole playlist over there. Watch it, and I'm sure you will enjoy what we have for you. Now, let's go straight into business. What do we have today? Today, we want to talk about Fibonacci trading, or Fibonacci. Now, let me say that when it comes to the Forex market and the technical analysis, we have two types of tools. We have two sets of trading tools. One has to do with indicators. The other has to do with some tools that you will need. And one of them today is Fibonacci. Fibonacci is actually a very popular tool in the Forex market. So I feel like talking about this Fibonacci so that you know what it is. And in case, I repeat, in case you might want to use it in addition to whatever strategy you have, you'll be able to maneuver your way and then get your way through it. So today we're talking about Fibonacci trading. So let's begin with the little notes I have for you. Now, Point 1 says, Fibonacci ratios came from a man known as Leonardo Fibonacci. He was a famous Italian mathematician. He discovered a simple series of numbers that created ratios arising from the following number series. And it's 1, 0, 1, 1, 2, 3, 5, 8, 13, 21, 34, 55, 89, 144. And this order of numbers is called Fibonacci sequence. Now, how did this man come by these numbers? I'm going to explain that to you right away. This is how this man we call Leonardo Fibonacci, who was a very famous mathematician from Italy, came by these ratios or numbers, which is Fibonacci sequence. Now, pay attention. Once you add the first and then the second number, it should give you the third number. And then you add the next number and then the next number, it should give you the next number. You add the next number here and then the next number here, it should give you the next number. Now, let me do that again. If you add 0 plus 1, it will give you 1. Isn't it? Good. If you add 1 plus 1, it will give you 2. Is that not it? If you add 1 plus 2. If you add 1 plus 2, it should give you 3. Are we good? If you add 2 plus 3, it should give you 5. Is that it? Good. If you add 3 plus 5, it should give you 8. In that order. If you add 5 plus 8, it should give you 13. Same order. If you add 8 plus 13, it should give you 21. The same order. If you add 13 plus 21, it should give you 34. The same order. If you add 21 plus 34, it should give you 55. If you add 34 plus 55, it should give you 89. If you add 55 plus 89, it should give you 144. So in that order, this is the sequence that Leonardo Fibonacci came with or brought into the world of mathematics. So when you see numbers like this, that is how he came by these numbers, known as Fibonacci sequence. Now, let's go to the next point. When you look at point 2, it says if you measure the ratio of any number to the succeeding higher number, you get 0.618. And let's see. Listen to the keywords here. If you measure the ratio of any number to the succeeding higher number, and the keyword here is succeeding higher number, you will get 0.618. So if you divide 1 divided by 2, you should get this 0.618. If you divide 2 divided by 3, it should give you 0.618. If you do 3 divided by 5, it should give you this. 5 divided by 8 should give you this. 13 divided by 21 should give you this. 21 divided by 34 should give you this. 34 divided by 55 should give you this, in that order. So for example, 34 divided by 55 will give you 0.618. So 34 divided by 55 here will give you 0.618 in that order. Are you getting the concept? This is just to give you an idea about what the mathematician called Leonardo Fibonacci brought to us Forex traders. Shall we continue? Now, let's deal with more notes. Now, if you measure the ratio between the alternate numbers, you will get 0.382. And he's saying, example, 34 divided by 89. So I want you to understand this very well. So let me go back one slide. If you measure the ratio between alternate numbers, you get 0.382. So what we mean is that if you divide, for instance, for example, if you divide 5 divided by 13, you should get the 0.318. If you divide 8 by 21, it should give you the same thing. If you divide 21 by 55, you should get the same thing. 34 divided by 89 should give you the same thing in that order. That is the sequence we're talking about. 1 divided by 3 should give you that sequence. 2 divided by 5 should give you that sequence. Is that okay? So that's what we mean by, if you measure the ratio between alternate numbers, you get 0.382. Is that okay? Now, this kind of ratio is called the golden ratio. And it appears in many courses. And some of the courses are geometry. Those who knows a bit about geometry. And those who are into art and then architecture. Those doing architecture drawings, they always fall on Leonardo Bonacci's or Fibonacci's golden ratio to be able to come up with their architectural drawings. So Leonardo Fibonacci has actually blessed the world of mathematics with some golden rules and ratios. And that is what we use in the Forex market to also determine certain decisions in the market. Now, enough of these calculations. All right, we are not going to do calculations, okay? Now, Fibonacci is a huge subject, and there are many different Fibonaccis, but we're going to stick to 2. That is the Fibonacci retracement and then Fibonacci extensions. I'll be showing you the many others also, okay? But we will only stick to, there are different types of Fibonacci, okay? When it comes to Fibonacci trading or Fibonacci trading, we have different types. There are about 5 of them, if I'm not lying. Maybe we will soon go to the practical, so you see it. Is that okay? But we are not going to talk about all of them. We will only talk about Fibonacci retracement and then Fibonacci extensions. Now, the good thing about the MetaTrader 5 or MetaTrader 4 is that we already have this Fibonacci tools inbuilt in the MT4 or MT5. And once you pull them, or once you pick the tool and you pull, the tool will automatically calculate these numbers for you. So you do not need to actually do calculations. But I just wanted you to understand the concept of how they came by those calculations. That is how come I decided to give you a little background about the whole calculations. So the good news is that, hey, I know you don't like mathematics, so we're not going to be doing calculations here. Is that okay? The calculations has already been done and it's inbuilt in the MT4 or MT5. So once you pull it, I mean the Fibonacci 2, once you pull it, it will automatically do the calculations for you. That's the good aspect of it. Is that okay? So that settles it. So now, like I said, we're going to talk about 2 Fibonaccis. That is the Fibonacci retracement and then Fibonacci extension levels. These are the two levels we're going to look at. Is that okay? Now, first of all, the Fibonacci retracement levels. We have these numbers. The first one is 0.236. The second one is 0.382. The next one is 0.618. And then the next one is 0.764. Now, these numbers are already coded in the Fibonacci tool on the MT4 or MT5. So once you pick the Fibonacci retracement tool and you pull it, you will get these numbers or calculations done for you free of charge. Is that okay? Now, when it comes to the Fibonacci extension levels, we also have 0. We have 0.382. We have 0.618. We have 1.000. We have 1.382 and then 1.618. These are the critical numbers we're going to be looking at in terms of Fibonacci retracement and Fibonacci extension. Now, let's continue. So like I said earlier, you don't need to know how to calculate these numbers. Once you pull the Fibonacci tool, it will do the automatic calculation for you. So that settles that. Let's continue. Now, let's look at these Fibonacci numbers that I showed you, or the levels that I showed you over here. These levels you are seeing here, the numbers. What do they mean? Or what do they stand for? We need to interpret that. So the Fibonacci levels. Now, listen attentively. Fibonacci retracement levels work on the theory that after a big price moves in one direction, the price will retrace or pull back to a previous price level before resuming in the original direction again. What it means is that we will soon go to the MT4 to show you or demonstrate what I'm reading to you now. But let me demonstrate something little here. What we're saying here is that if the Forex market is moving in one particular direction like this, and then it gets to a certain level, it will retrace back or do a pullback to another level downwards. It will retrace back to a previous price level, maybe to this level, then it will resume the trend again or the direction again. And that is what gives us what we call the support and then the resistance. So do you now understand the reason how we came by support and resistance? It is because of these pullbacks. So it is believed that when a trade is moving in a certain direction, it will do a pullback or it will retrace back a bit and then continue the direction again. It may do another pullback again and then continue the same direction again in that order. So if it is from the downside, it may do a down movement like this, do a pullback or retrace back, then resume back to the trend again, do another pullback or something, then return back to the original direction. So once you have the trade doing this, you are able to get retracement levels, which is known as resistance, support, resistance, support. So the question here is, listen carefully. If the trade, for instance, is moving up in one direction, and then it starts coming back down, to what level will it reach before it will resume back its original trend? That is the question. To what level will the pullback come? Or to what level will the retracement happen? Yes, we all know the trend is going up and now it decides to come back down. To what level? Will it come up to this level and go back, or to come back down to this level before going back or resuming its original trend? Because you don't know, that is why you need Fibonacci retracement levels. I repeat, because you do not know the level of the retracement or at what level the retracement will happen, that is why you need Fibonacci retracement levels. So those levels are going to be a guide to tell you the critical points at which price may bounce or resume its original trend again. Am I making sense? If yes, let's continue. This is getting interesting, right? Good. Now, point number 2. After taking a trade with retracement levels, traders use the Fibonacci extension levels as profit-taking levels. So the second aspect, I told you I'm going to talk about only 2, the Fibonacci retracement and then Fibonacci extension levels. So the extension levels are actually meant for profit-taking, when to take your profit. So those of you who do not also know where to put your TP, maybe you can decide or choose to use Fibonacci extension levels as your TP or your take profit levels. Is that okay? Now, Fibonacci retracement levels are only a predictive zone. Listen carefully. They are only a predictive zone of where price may be in the future. So let me repeat that again. The Fibonacci retracement levels are only predictive zones of where price may be in the future. So yes, the trend is going down up like this, okay? And then you get Fibonacci numbers here, here, and maybe here. Or maybe another one here. What it means is that these Fibonacci levels you are seeing here, after you pulled your Fibonacci, the 4 levels you are seeing here, this one here, this one here, this one here, and this one here, is just a predictive zone of where price may be in the future. So when price decides to do retracement, it may choose to retrace up to this level and bounce back up to its original trend. Or it may break and come down to the next level here and then bounce back up. Or it may choose to come down to the 3rd level here before bouncing back or resuming its original trend. Or it may come down to the last level here before resuming its trend again. So these levels you are seeing here are just predictive zones of where price may come back in the future. Is that clear? Are we good? Thank you for understanding. Now, let's continue. For Fibonacci retracement levels, how do you do it? How do you get a Fibonacci retracement? How do you pull the tool and then do the drawing on the chart? How can you do that? Now, for Fibonacci retracement levels, you have to find a recent significant swing high. Listen to the key terms here. Significant swing high and then swing lows. So your swing highs and swing lows must be significant. And what do we mean by swing highs and swing lows? What we mean by swing high and swing low is, for instance, the trade is moving up, then it pulls back, move back again, pull back, and then begin to move back again. These are your swing high. Your retracement levels are your swing high or your higher highs. And then the level at which the trade resumes back to its original trend is the support level, which is the swing low or lower low. So we have the swing low or lower low, swing high or higher highs, or better still, resistance levels and support levels. So you have to look for significant support and resistance levels, not just a mere support and resistance or a minor support and resistance. You need to get a significant support or resistance level, or swing high or swing low, it must be significant. Is that okay? Point number 2. Now, for downtrends, you click on the swing high. After you have picked your Fibonacci tool, you click on the swing high and drag the cursor to the most recent swing low to get a Fibonacci retracement for a downtrend. We will soon do this on the practical MT4, so no worries. Now, for the uptrends, you click on the swing low and then you drag the cursor to the most recent swing high to get your Fibonacci retracement levels. Now, there's something interesting. When you look at the numbers that I showed you, you realize that there's nothing like 50.0% in the Fibonacci retracement levels, but no one knows what happened. The 50.0 ratio has now officially found its way or snaked into the group of the Fibonacci levels. And since its inception, it never left. So you realize that when I go to the Fibonacci levels and I begin to draw, you see the 50.0% level, which is not an original calculation level, but we don't know how it managed to find itself in among the levels. And it has come to stay because it gives wonderful predictions. And so people have come to love it. And so no one is complaining about it. So I just want you to know that when you find a 50.0% in the other Fibonacci levels, know that this man here, the 50.0%, is not an original retracement level. No one knows how that level came in, but it's been wonderful level, which traders do enjoy using it at that level. So we will stick to that. Is that okay? Good. Now, I'm almost getting to the end of these notes before we zoom into the practicals. Now, before I even go to the practicals, let's look at this. I want everyone who have watched this video patiently to this level to please subscribe. I want to get to 10K subscribers now. I have about 1.3K now. I want 10K subscribers. This is the agenda. I know you can help me to get to that level. That is when you subscribe. And then you also talk about it to someone, or this channel to someone to also subscribe. Let's get to the 10K. And then we can move to 20K, 30K, 100K. And it's possible to even get 1 million subscribers because the content I'm sharing with you here is exceptional, isn't it? Thank you. So subscribe. Now, let's go straight to the practical room so that we can look at what I'm sharing with you now in practical form, in theory form. All right. So this is the theory aspect. We are done. Quickly, we are in the practical aspect. So now that I'm done with the theory aspect, I need to take you to the practical aspect. Are we good? So this is our MT4. Now, on our MT4, if you want to look for Fibonacci on the MT4 or on the MT5, whichever you are using, all you need to do is you come to the top left corner here, at the top here, where I'm circling, at the top here. You will see insert. Insert. We have file, view, insert, chart, tools, window, help. So insert. So when you go to insert, click on insert. If you click on insert, there will be this pop-up. On this pop-up, you will see Fibonacci. We have indicators, we have lines, we have channels, and then we have guns, we have Fibonacci. So when you click on Fibonacci, which is here, you will see Fibonacci retracement, Fibonacci time zones, Fibonacci fan, Fibonacci axe, and then Fibonacci expansion. And just like I told you, we have different type of Fibonacci's. We are only going to stick to the retracement and then the expansion, the first and then the last. We will skip the remaining three, which is the Fibonacci time zone, fan, axe. And then we'll stick to only the retracement and then the expansion. Is that okay? Good. So now you know where to find your Fibonacci. You go to insert, you come to Fibonacci, and then you see retracement, time zones, fans, arcs, and then expansion. So we are doing Fibonacci retracement and then Fibonacci expansion. They are the two we will do. Are you ready? Now, let's go to the rules. The rules of the game says that we should look for significant levels. And if we want to look at significant levels on this, this is one, this is another one, this is one, and then maybe finally this is one. So we are looking at the instruction says the recent significant highs and lows, the recent ones. So among this is not recent. This is also not recent. This is the recent low and high. So we'll stick to the recent lows and high, which is this one and then this one. Is that okay? So let's go and grab our Fibonacci 2. So we go to insert, come to Fibonacci, we click on retracement. Now we have our 2. The rule says if it is an uptrend, you will have to click at the down low, then you drag to the higher up. So we click and hold, then we begin to drag, and then you see that your Fibonacci levels are showing. So we drag it to the last top end of the chart, isn't it? Which is somewhere here. Then we leave it. Now we have our Fibonacci levels fully drawn. So you can see them here. We have the 0.00, 23.6, 38.2, the 50.0, 61.8, the 100, the 161, and the rest. So all these are the levels. Let me clear. So if you want to take off this Fibonacci on the chart, all you need to do is to look at the red thin line, the red thin line. Double click on that red thin line, and then it should highlight. Once it highlights, you can delete it. You click, and then you delete. The whole Fibonacci is gone. Are we good? Great. Let me pick another pair. Okay. This chart, for instance, if you look at it, it looks a bit messy, not actually trending well. So let's pick another pair. Maybe looking for something trending. Okay, Euro Chef. Okay, I have this trade myself. I've taken a trade here. Anyway, let me show you what I haven't taken. I need something that I have not taken a trade on. Let me see this. Good. This is something good, right? Okay. Anyway, my chart is on the daily time frame, and I'll explain why. All right. Or better still, let me take this one. Good. This one has been trending nicely. So let's look at the levels. I just want to show you. This is a level. The whole of this here is a level. This is a level. This is the last higher high. So if we want to draw our Fibonacci, let's go pick the 2. Retracement. We pick it from here. Then we go to the last one, which is here. Then we leave it. So this is our Fibonacci. This is the higher high, and this is the lower low. Now, the retracement has started happening, and it happened and came to the 50 level, almost on the 50 level. And then you can see that it has started going up. isn't it? So these are levels at which your price can bounce back and resume the original trend. These are the lines. Are we okay? Now I want to look for a downtrend. Then we can look at how to draw on the downtrend. On the up trend, you pick from the down, then you draw up. Let me see if I'll see a trade. AUD. AUD has been trending up also. Euro NZD. Okay. This one has been trending down. Good. So let's look at the levels. So we have this level here. We have this major level here. Level, level, and then currently that's where we are. So let's draw a Fibonacci. And the rule says if it is a downtrend, after you pick your retracement tool, you look for the recent lows and highs. So this is the recent higher high. And then you drag it downwards to the lower low, which is here. Can you see that? Now, you can see that as it stands now, these are the levels we have. So if a retracement is to happen, we have the first level here, the second level here, the third level here, the fourth level here, the fifth level here, and then maybe the others up here. So if you look at this trade right now, you realize that it came on the 38, it's all zooming here on the 38.2 area. This is the level it is, and it has made its way back down. These are how to read using Fibonacci. Now, the reason I'm using the higher time frame is that it is always good to draw your Fibonacci on a bigger time frame. Once you draw, then you can zoom to the smaller time frames, and it's going to be the same. So on the smaller time frames, it's going to be the same thing. Look at it. So on the smaller time frame, this is 4R. So the trade from down, it retraced, and then on top of this, as you can see, this is the level it's kept on retracing, 38.2 level. It started retracing and making its way back down. Are we seeing that? So once you draw on a higher time frame, you can zoom to the smaller time frames, and then that will give you a clear picture of what you are looking for. Is that okay? Now that you know Fibonacci retracement, let's quickly look at Fibonacci extension. Now, these levels I showed you are levels the trend can retrace back. But you cannot just trade this alone using Fibonacci alone. If you try to use Fibonacci alone, you make a lot of mistakes because the levels are many. You do not know on which of the levels exactly the trade will resume its original position or reverse. Because for instance, just like I showed you, if this is maybe your retracement levels and you took this, you do this as your retracement level. You do not know at which of these levels the trade will come back or turn and then resume its original trend. You do not know. So you need to add other strategies or other tools. You need to accompany this retracement with other tools or other analysis. Let me say that. You need other analysis to confirm whether the U10 you are seeing on a particular level is actually a valid one. Am I making sense? You need to include other analysis in order to be sure that, okay, this U10 or the turnaround I'm seeing is actually a valid one, or it's actually a possible U10 or a turnaround back to its original trend. So you need other analysis to confirm. You cannot just use only Fibonacci levels to trade. You will be making a lot of mistakes if you do that. Is that okay? Now let's look at Fibonacci extension. And like I said, the extension is often used for take profit. So assuming You went for your Fibonacci expansion, and then you draw. Once you draw this here to this level, it has helped you to know, if I zoom it here like this, the extension is even helping you to tell you where the trade may end. The extension is telling you that the Fibonacci level may come up to this level here. And so when that happens and you begin to see the U-turn, and the U-turn begins to happen, this will be your first TP. This will be your second TP. And if it will continue, this will be your third TP. These are the levels you can take your profits. 3 different levels. Your first TP here, second TP here, third TP here. This is Fibonacci expansion. So the Fibonacci expansion is a tool that gives you the opportunity to know where to put your take profits. If I choose a different pair, for instance, this one, this is card chef. Now with card chef, let's draw Fibonacci retracement first. Somewhere here, right? Let me pick somewhere here. Look at it. Look at the Fibonacci levels. Look at the levels. As you can see, it humbly respected. Look at this on daily time frame. Look at the retracement that happened on the 50 level. On the 50 level. And right after that, it made its way all up. Each of these candles a day. For a number of months, this trade has continued on its up move. So once you identify this as a retracement level, and then you join the trade, maybe you pulled your Fibonacci down, and then the trade gradually came back and then started making a U-turn from here. So once you join the trade from here, this level here, and you are buying, where should your TP be? Okay, where should you put your TP or your take profit? That is where you need a Fibonacci expansion. So you go for the Fibonacci expansion, then you draw the same thing to this level. Now, where are our TP levels? Look at it at the top there. You can always drag it down to see them. Here they are. So it means once you enter the trade somewhere here, come on, sorry. That's not what I wanted. Once you draw or you enter your trade somewhere here, once you buy somewhere here, your first TP is here, your second TP is here, your third TP is here. This, you are seeing it so distant because I'm doing it on the daily time frame. If you do this on the smaller time frames, you will see the take profit levels being very close. So once you take your trade at this level, you know your take profit levels. Is that okay? So this is how you can use the Fibonacci trading tool, either the expansion or the retracement. If you have any questions, please leave them on the channel. I'll answer them. Or better still, in my next video, I can come up with some of them and explain further. My name is Kofi, your admin for this channel. Once again, subscribe, and I'll see you in the next episode. And in the next episode, I'm going to talk about sentiment analysis or fundamental analysis. I'm looking at which one to talk first. So which one do you think I should talk about first? Sentiment analysis or fundamental analysis? Please leave your answer on the channel. Should I talk about sentiment analysis or fundamental analysis? Because we've talked about technical analysis for some time now. So it's time to join a new analysis. And then after sentiment and then fundamental analysis, I'll come back to technical analysis because we need to talk about other tools like the moving averages. A lot of them, the Ichimoku and some other critical trading tools. We'll be talking about them. So we still have a lot more to talk about on this channel. I'm giving you everything you need. So subscribe and I'll see you in my next video. God be with us. And then please subscribe once again. Thank you.